Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, Havells India, that's the next company on our radar. Remember, yesterday the stock ended higher, but there's a bit of weak consumer demand that's hit them a little bit in the third quarter. To understand what's the outlook from here on, we're joined by Mr. Anil Rai Gupta, the chairman and MD of the company. Hi, Mr. Gupta. Good having you on the show, sir. The last time when we spoke on this show itself, you had indicated that margins will improve a little bit in quarter three, but in quarter four, you're quite optimistic as well. So what's the range? What kind of an improvement we could see on margins? And also specifically, I wanted to ask you on the lighting business. That's a bit of a pain pocket out there. Is the worst behind on margins for the lighting business?
Well, actually, you're right. When we entered into the third quarter, we anticipated that we had still some amount of high cost inventories, which will be sold in third quarter. But we expected there will be a margin improvement, which has happened in most of the businesses. Going into the fourth quarter, because other than Lloyd for some air conditioning inventory, most of the high cost inventory is already sold. So we should be expecting better margins in the coming quarter as well. But the fact is that there is some volatility now in the last few weeks in the raw material prices, which we'll have to see how it pans out and have a careful outlook there. On the lighting front, you mentioned actually, if you look at we're actually quite positive about the fact the growth in lighting over a longer period of time in the last 3 years, how we've gained market shares. Also, the contribution margins is actually quite stable in lighting. It's only when we have certain new innovations, we advertise the third quarter is generally higher on advertising because of Diwali. So I don't think I'll see it as a weak point for Havells. In fact, it's one of the most strong points because a lot of innovation is happening in lighting business, which actually the consumers are really appreciating.
Okay, Mr. Gupta, we'll come back to the margins and the improvement that you're probably anticipating in Q4, and we'll quiz you on some numbers there. But I just wanted to understand a more qualitative part, which you did highlight, where there was very muted B2C demand. Your consumer-facing businesses did see muted demand because of the higher inflationary risks or the inflationary environment that we're in. Explain to us what you mean by that. How much did it impact business? What are you anticipating in the next couple of quarters?
Well, if you see, the growth over the last 3 years, the consumer and residential side has always been extremely strong. Our growth has been market beating. So in this particular quarter, consumer and residential went down, despite the fact that the real estate continues to do well. So we are attributing this to the inflationary trend over the last 1 year. And, that may remain for 1 or 2 quarters. But it is also offset by the fact that the real estate demand is doing well. On the other hand, the industrial and infrastructure demand continues to hold strong, which is giving good growth for the organization. But if you see on both sides of the business, we are getting a CAGR over 3 years, even during over the COVID times, of more than 15%. So it's a healthy state to be in. Temporarily, there could be some blip because of the inflationary trends.
Right, Mr. Gupta, fan restocking at channels has started for summer. Any benefit for brands with rating change?
In fact, I think it's a general benefit to the consumer. However, it does impact the pocket of the consumer as well, because the ratings change does mean a higher cost to the consumer. So we will have to see in this season how it impacts the demand. But definitely, it's a beneficial thing for the consumer overall over a longer period of time for the ownership of the fan the consumer uses or the air conditioner. So but it will impact the pricing at least 3 to 4%.
Okay. Now, Mr. Rai, coming to the margins, you have improved Q on Q, 7.8 to around over 10%. Can you just tell us what you can guide us towards in terms of a consolidated blended margin? Maybe in the next 1 to 2 quarters, what might your peak be? And would you revert to the peaks that we saw in the previous quarters of, say, around 12%?
Yeah, I think, generally, we have never given any guidance and we don't intend to do so. But I can only say that, with the demand scenario stabilizing, hopefully the raw material continues, stabilizes, which, as I said, we've seen some volatility. We will definitely see margin expansion over the next few quarters, and hopefully we'll be reaching our normalized margins in the coming time. But, it is difficult to say whether it'll happen in one quarter or not.
Let's focus on Lloyd's business then. What's the target? When does it turn profitable? You've been taking measures, and the likes. But if you have, a particular fiscal year when you expect that to turn profitable, and also I think on market share, Lloyd's is at around 12 to around 13%. You could correct me on that number. You could give us an updated number on Lloyd's.
Yeah, I think this year Lloyd Business has grown almost 50% in the first 9 months. So there is market share gains. I can't really exactly comment on the market share numbers because we have 4 product categories there. But we have gained market share during this year. And that will be a continued strategy for the coming times. India is definitely a huge market. Air conditioning penetration is very low in the market. So that will continue to be a strategy. We will focus on margin expansion in the coming times with the costs, abating, and the fact that we'll be more dependent upon in-house production. So we will see margin expansion in the coming times. So I think the next focus for Lloyd is high growth as well as margin expansion.
When does it turn profitable, sir?
We'll continue to invest in brand and distribution enhancement. So we'll not hold back there. And, I think the bottom line is just a reflection of, what our sales growth is, what the cost will be, as well as, our investments will continue to be there.
Okay, all right. It's always good speaking to you, Mr. Gupta. Thanks so much for stopping by. Looking forward to having a chat with you at the end of the next quarter numbers. Well, before we wind up, just want to point out one stock, Nureka. Well, the stock is up close to around 15%. Keep in mind, it's down 80% in the last 1 year or so. But as we speak, Nureka is moving higher and moving higher in very, very large volumes. So just want to spot that out. 1 year chart as well will tell you the picture. It's been a big underperformer, but popping up in trade. On that note, though, we'll have to wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.